policy underlie the participants' projections of growth, unemployment, and inflation that I just described. Importantly, these policy assessments should not be viewed as unconditional pledges. Rather, just as with our economic projections, these policy projections reflect the information available at the time of the forecast and are subject to future revision in light of evolving economic and financial conditions.
Hello traders, Gary Wagner here. Approximately 9:30 a.m. in Honolulu, which makes it 3:30 in New York City, Wednesday the 25th day of January 2012, and this is the daily report for gold and silver. Gold and silver this morning on a tear due to statements made by Federal Reserve Chairman Ben Bernanke. $1,700 gold, roughly thereabouts, and $33 silver. Today's report, we will look at upside targets. Now that our first initial targets have in essence been taken out, we remain long and we remain strong. All of this on today's daily report. Traders, there can be no doubt this kind of statement is a statement heard around the world. Of course, we have the stock market higher, dollar under incredible pressure right now, gold, silver, precious metals complex higher. Let's first go to the board, and I want to take a look at our 60-minute chart just so that you have an idea of the kind of spike that we saw. Of course, yesterday I had some absolute concern. The concern that I had was that after we had hit these highs, this is right around 1680, right in this area, we were slowly meandering down, and my sentiment was that if we got any kind of a knee-jerk reaction that was negative to metals, to make sure that we had stops below this 1650 area. And you can see why that was the area that I had pegged for the stops. Traders, you would have put them somewhere around here. Of course, we're safe in that, and you can see the kind of spike that we saw. This is during the press conference right now as it goes on. You can see it's ranged from a low of about 1694 up to a high of about 1703, right in that area, currently trading right at $1,700 per ounce. And as I say, it's been fairly erratic right now, but you've got some wild swings in the market. Now, how does that pan out towards our daily chart? Because that's what's really important. When we take a look at the marketplace itself, you'll see that the target area that I initially had looked for this market to find some resistance, and when we consider what that is based upon, when we look at this 1686, you can see some historical data here that suggests that it might have some sort of a resistance area. It's kind of rallied right through that point. And so on today's report, I'm going to talk to you about some of the next targets that we absolutely want to look at if the market continues higher, which I believe it does. And we're going to be looking at certain tops. This top, for example, right here, this is 1750. 1750 appears again right here. So there's a resistance area about $50 from here. That could be significant. And the other one is this dip right here. And that's, if we line it up, you'll see that that's kind of close to where we are now. I just want to make sure that I bring in that line straight. Right in there. And so you can see if we get any kind of resistance coming up, that's pretty much where I would look for it. We've got a very solid position. I mean, we're long at, 1580, so roughly right in this area, right in here. We've been long since the 2nd. That was actually when I initiated the recommendation, so you can see that you can be in at anywhere around there. I've been calling it 1580. I've heard some of my subscribers in at 75, some in at 83, in that area. But we've got a really nice trade going on. Also, we did recommend back about a week ago aggressive traders could go ahead and add to that position. So there are some people out there that are holding on to this position, and we've got a nice profit in there. So we're going to take a look at that throughout the week in terms of where we think that market might head and exactly how to work with that position. When we look at our weekly chart, of course, you can see this is our 4th week in a row. It's solid. It's green. When we convert our weeklies now to our Heikin Ashi and realize it's going to be a lagging indicator, but what it will give us an idea of is overall trend in the market, meaning the strength of the trend. We'll go ahead and convert it. You can see you've got the absence of lower tails right now. You've got nice strong candles to the upside. Let's take it to silver. Silver just outperforming everything in terms of percentage gain. We talked about the fact, and this is the way I do like to be wrong, by the way, traders, is that when I am long, we pick certain benchmarks and it blows through those benchmarks. It makes me happy because we're still sitting long, and that's what we want to do. Now realize that where I was looking for resistance right in this area, 31.86 to 91, you can see the market did consolidate. It wasn't a point in which the market went straight up. It was a point where the market, rather than on a typical market, which probably would have corrected in this area, what you got was that sideways consolidation. We've been talking about that all week, that this market tends to spike up. Well, here we have a small retracement, consolidate a little bit, spike up, consolidate a little bit, spike up, consolidate a little bit, and then again, we have spiked up. We talked about the fact that what I believe our next real target is going to be is really $35 an ounce. That's our hard resistance, 61% retracement, 35.31. We'll see where that market wants to go. Lastly, if we look at the weekly, you can see a weekly silver chart. This chart has just been dynamic. We've seen this market move from 26 to 33. Of course, we are long at $28.10. We'll go ahead, put up our Henkin chart, and that's just going to give us an idea of strength of trend. And I think that you're going to see in silver, you've got this tremendously, on the weeklies, tremendously long candle. It's only midweek, but look at how ever since this market bottomed, we are moving towards having these larger and larger candle size. Is that reminiscent of any other point historically? Well, actually it is. You can see how they grew here, and you can see on this record high that we hit, of course, Hunt Brothers matched it, but that was decades ago. You can see how this market, these candles get bigger and bigger as that market increases in its dynamics, increases in its power, and increases in its price action. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.